Hey, everybody, welcome back to another beautiful day in real estate. Today, we're going to go over some information about the housing market, and then we're going to start diving into the potential liquidity and private credit crisis that people are talking about. So, more recently, everybody refers to 2008 because it was like the most recent crash in history, right? Outside of 2020, which was a little bit different, but COVID was. But this could be that black swan that people aren't really anticipating. We're going to talk about how it could affect your finances and such. But before we get too aggressively into that topic, let's touch on interest rates. So interest rates, you guys are starting to move south once again. We were at 6.6, we're at 6.47 right now. FHA and VA are now trickling back into the fives, and the reason why is simple because there's been talks and there's been multiple sources confirming that Iran's new president, much less radicalized and far more intelligent than his predecessors, has just asked the United States for a ceasefire. We will consider when Hormuz Strait is open, free and clear. Until then, we are blasting Iran into oblivion, as they say, back to the Stone Ages. So always a little bit more aggressive with him. But anyways, so essentially what people are basically the market's holding. So yesterday the market didn't move much. Usually at open you see this pretty big significant move, and since I guess we're talking about it, I'll pull it up while I'm talking. But yesterday at open, and I mean market opened 45 minutes ago here. So I mean already, yeah, geez. Okay, so market opened here about 45 minutes ago. So what really is happening? First off, we'll talk about oil and then we'll go to bond prices. So yesterday, for those of you that were paying attention, yesterday we were kind of right above this 101 at market open. If you see, this is kind of a big fight because it got as high as 105, it got as low as essentially 99, and it closed almost exactly where it opened yesterday. So it opened at, it opened at 102 and it closed at 99.25. So this just means that the buy and sell pressure was going back and forth pretty aggressively. This means, I mean, it did close a little bit lower than when it opened. So that means that the bears kind of have control right now. But I think that this was in talks behind the scenes and nothing really came out until this morning. But that's a big reason the market is reacting the way it is, because I mean, I talk about oil almost every day now, and the reason I'm talking about oil is because it's just, and this is crude oil, by the way, this isn't futures, this isn't, okay, but crude oil and oil in general is going to be what shapes the interest rates for bond prices, which shapes the interest rates for mortgages. And until that war ends in Iran, we're not going to see that change. And the more that we start to see these talks of, ceasefires and things of that nature, that's going to be a big part. That's what's going to really drive things home. And like I said yesterday, right now, the RSI, and from a technical point of view, we saw a lower high on the stochastic. And this is the daily chart, but I'm guessing for the next couple of days, we're going to see some downward action, at least to 92. That's where I'm seeing the most support, more recent. If we're factoring in support. Again, I'm going to go off technicals right now because we're in a short-term basis. If we're talking long-term, then it's a little bit different for me. But you can see right here, we kind of had that peak. We had some volatility, and then we had a bottom, and then we saw a little bit of movement here again. Sorry, my writings or my drawings aren't that great when it comes to the computer, but for me, I'm seeing a positive notion of oil going down. And as long as these ceasefire talks continue, that means that we're going to most definitely see some oil prices go down, because once they open up and 20 million barrels of oil is starting to flow through the Strait of Hormuz again, that means that we're going to start to see oil prices come down. Gas prices are going to start to fall slowly. It's not going to move like it did upwards, but it will start to come down just a little bit. And then from that notion, let's talk a little bit about, bonds. So as we kind of figured, they popped down yesterday. Again, we were sitting right here about 4.3. They came all the way down to 4.24. And like we said, we're probably going to see that fall off that 4.27 before it moves up again, if it moves up. And right now, on the new day, that's crazy, man, for a new day. This opened at 7 yesterday. So 7 Central is when these candles start. But anyways, we already saw it again from a technical perspective. We saw our highs, and then we started to see a little bit lower highs, and now it's coming down. RSI came down. It broke this trend right here, which was pretty solid, but it bounced off right here at about 70, and they were heading south again. So again, I'm more optimistic right now because, and I mean, I'm always been an optimistic guy when it comes to real estate. Everybody's so short term minded. You have the conversation with people and they say, well, we have this going on and this is going on. And this is why I bring data for the real estate market, because short term things are always going to be volatile. Just more recent in the last few years, especially since COVID, volatility is a lot higher. So you see a 20% move is pretty normal compared to a 10% move 10 years ago, right? And it's because there's so much more liquidity that was in the market and it moves back and forth. So, um, without getting too into the rabbit hole, essentially over COVID, so many people who had lots of money have lots more money. We'll just say that. And people who didn't have a lot of money but got stimulus checks, they put all their money into investments and they didn't know where to exit. They didn't know how to strategize. They didn't know those things. So the market ran and everybody thought they were going to be rich forever. And then the market collapsed, right? Well, we talked about where we at. It's not the S&P. There we go. So the S&P. So the S&P is down from its highs, right? So S&P from its highs, we'll just pull a general average here, 10%, right? So if we're talking about actual recession periods, right? A recession is going to see about a 20% move. We're kind of there. I mean, it's possible for us to see 22% to 32%. So it's not going to be impossible if the war continues, we see 5,000 to 4,700, somewhere in there. That was the most recent high before we saw a correction. And then we saw a big move up. But right now, I keep forgetting to pull this up, but right now we saw that break of the trend line. Like we saw boom, boom, kind of broke low, stayed above, broke below. What was this? This was March. So this had to have been during the initial tariff wars. That's where that time frame was, where we were talking about tariffs, you're talking about trade wars, and then it rebounded and now it fell through pretty significantly, right? So this means to me that if we're about 9% down from the top right now, so that means we're probably going to get closer to that 22 if things continue to be negative, right? If things continue to be better and positive, we could move up. I think 1.7 trillion was added to the market yesterday, which is honestly very, very big. That's one of the best days of 2026. But that was in total market cap. But right now, I'm still moving into springtime a little bit more optimistic. So at first, if we would to continue to see no potential progress on the Iranian war, and I say Iranian war conflict, whatever you want to say it is, but I think that if we could actually see some sort of partnership, if you will, it's going to be very positive for the market. We already have Venezuela under control for oil, which means if we can have Iran, which is another huge producer, I think it's like 35% of oil comes through the world's oil comes through the Strait of Hormuz. If we can pull that into a partnership or a ally, right, in a sense, rather than not, we could have a big control over that market. And if we have big control over that market, more people are going to want to do business, right? When the market's stable, people want to do more business. And right now, I get it. Everything seems pretty negative, and this is going to go right into my next one before I get on my next talking point. But Freddie Mac USA House Price Index year over year is meaning that like the increase on average across the United States year over year is just above 1%, like barely above 0%. So they're anticipating that they're going to go negative, right? And then last time we saw negative was 2008, and before that was 1982. So I mean, like, those are huge concerns, right? And that's again why people keep saying, "Oh, we're going to see a 2008. We're going to go see a 2008," because everybody's anticipating that there's going to be a market crash. I don't think it's 2008. I really don't. I don't think housing is going to be the reason the market crashes when it does. I think what's going to happen is that the credit issue is going to be in effect. And with the credit issue being in effect, that's liquidity, right? There's no liquidity in the system. Everybody's borrowing debt. And before I get too far onto that rabbit hole, but right now that affects your 401ks, that affect your Roth IRAs, that's going to affect your investments, affect your investments as a retail investor, whether that's your portfolio for retirement, whatever. But this is the average that you're seeing, right? So I pulled a little bit of data, and I got to say, dude, Claude is becoming my new favorite. I won't be using ChatGPT anymore at all. But I did see, listening to my video with who is it? Graham's the last name. Stephen Graham, Stephen Graham. Anyways, big guy, big real estate guy on YouTube. But anyways, he talks about some of the best places to live. And right now, Delaware and the North Dakota are the top two places that have seen 6% increases. Illinois is also 6% year over year in increase in value in your home. Right. So again, people always make fun of me for living in North Dakota. People who come here to do work, like I talked to a guy who's a manager for our company. We hired him on to help us build our building company and get better with our salespeople. And we were driving out to his site yesterday, home site, to go do some some research for it. And he he goes, I've never been to a place where you guys all are programmed to say the same thing. He's like, it doesn't matter if I'm getting food or if I'm getting into my hotel or getting my rental car. He's like, you all ask me what brings you to town. I say work, and you say, yep. That's about the only reason somebody comes here. And I mean, it's not, not false. It just is what it is, right? North Dakota, we have a saying, you can see your dog run away for 3 days straight because it's so flat and it's boring as hell. But if you can get over that, if you can start doing that, it is the sixth most affordable state in the United States to live in, price to income. It's the top hottest market in 2026 and the 33rd in medium home prices. So that one's not as positive, but the top hottest 2026 market. Now, I haven't looked at this data for a few months, but last time I looked at data, it was last November, I think, for this, and it was talking about how North Dakota is 10,000 homes behind what people are moving into the North Dakota. Because again, North Dakota may be boring, but a lot of people move here, whether they're from a different country or they're coming from East Coast, West Coast, Florida, Texas. People move to North Dakota because it's stable. It's stable, okay? And people can make fun of North Dakota all you want. I do not care, because here's the thing. Medium trend prices. So in 2023, the average home price 265. Again, this is just us talking about the national median in North Dakota now at parity. What the freak? Okay, anyways. But anyhow, so we saw a 6% increase, 6.8, and so a 16% in total. So that means that prices have moved up pretty significantly. And affordability rankings right now versus the 50 states, we're number 5 for one of the most affordable states. Now, Mississippi in the South is a big one. Kansas is another one. Iowa, West Virginia. But basically what that means is that we are we're one of the most affordable places to live in. And right now the outlook is seeing no crash. And I've talked about this before because everybody's worried about the housing market. And when I meet with clients, sellers or buyers are like, oh, we're waiting for a crash. We keep seeing headlines and blah, blah, blah. And listen, I totally understand where they're coming from, but I don't at the same time, because North Dakota is a lot different than than metropolitan areas. New York, Orlando, Austin, Seattle, Portland. Like, we're very different. Even Minneapolis. I mean, we're very different. We're a lot more sustainable. We have a low population for the most part. I mean, on average, I think we're at like 70,000 people in Bismarck and 20 some thousand people in Mandan. Like, we're not a huge place. I mean, 100,000 people, 90,000 people is not a significant amount of people, but there's a lot of good paying jobs because of natural resources here. So you have coal, you have oil. I worked in the oil field. Jeez, if you work and you know how to work, man, I was making $600 a day minimum. Like, I was hauling ass out there. I hated it. It was shitty work. If you're working on an oil rig, you're making tons of money. If you're working in the coal industry, I know my brother-in-law, dude, he started out there making $30 an hour, and that was as an internship. And he's up to 50 an hour or something like that. Paid benefits. Like, it's, and you get 4 on 4 off, 3 on 4 off, 4 on 3 off. Like, it just depends on your schedule, but people can afford to live here, and that's why people are moving here, because affordability is an issue across the board. And I wanted to pull that data, and again, I probably could have explained it a little bit better, but I'm getting into that. We'll get there. But right now, unemployment's at 2.3%. It's the lowest tier nationally. So we have less than 2.5% unemployment in North Dakota. The low foreclosure rate of 102 statewide. So there's about 102 homes statewide that are in foreclosure currently. And the energy sector and agriculture. Shit, I didn't even think of that. But farmers, man. Farmers out here. Holy shit, man. They have huge farms. We make a lot of money, and the subsidiaries that came from the federal government for agriculture recently actually overran Bank of North Dakota. That's another thing. Bank of North Dakota. Bank of North Dakota is one of the only states in the country that has a bank of their state. So Bank of North Dakota. And Bank of North Dakota, dude, they hold a ton of investment. They do phenomenal work. And they just got all the, that's where that money went to, the subsidiaries went to, or the grants went to Bank of North Dakota, who passed it on to the AG community. But North Dakota is a safe place to be. I mean, I started in real estate because I wanted to move to Florida. I did before COVID. I met my wife. We were planning to move to Florida. And then I just last minute, I looked at it side by side and I'm like, to buy a house in Florida versus here, to make a livable wage versus here, like nothing made sense to move to Florida other than the nice weather. And I mean, that only lasts us so long, right? So here we can travel 5 6 times a year, we can live pretty comfortably, we can build a house. I mean, lots of good things here to pay attention to. And I mean, safe school systems is a big one for families. But um you know, that's why I pulled this up from, the federal agency, or federal housing agency, is just because North Dakota is ranked number one for the increases year over year, 5 years 34%, and since 1991 353%. So if you would have bought a house in 1991, which I was still apparently floating around in my dad's, what, at that time, but 353%. See, the thing is that people don't understand about real estate, especially in my generation, is it's not fast. So they don't want it. It's not fast. It's not quick. We have lots of gambling mentalities in our generation. And it's because so many people grew up with the fast now, right? Amazon stuff's here now, right? You go to buy your stocks on Robinhood, they're here now, right? Like the automatic, like, delay is very, very slow. So when people, and especially in my generation, they don't want to buy a house because they don't see the change. But here's the thing. I mean, I made 30% on my house, 35% in equity in the last year, or excuse me, the last 4 years living in my house. And it was a small house. We had to push ourselves a little bit. We're comfortable now, but at the time we were very scared. And now we have a big down payment for our next home that we're going to build, right? So there's a lot of things that make North Dakota a good place. We'll say that. And the next thing I was going to touch on is rents are down 1.7% over the last year, 34th consecutive month of year over year decline. And this is a big thing too, because during COVID, as you can tell, from 2020 to basically 2020, what did we peak here in April 22? Dude, rents were ripping right then. I mean, rents are still going up in North Dakota, but again, this is a national average, but rents rents are like, it's insane to me because people are paying $2,700 a month to rent an apartment, to rent a twin home. And in North Dakota, if you were to use ND housing, you could pay that much a month and you can start gaining equity. But nobody sees it that way, right? Because we've been positioned and programmed to believe that renting makes more sense because there's no risk to it. You're not losing equity. You can leave whenever you want, blah, blah, blah. Right. But you're gaining nothing from it. You're borrowing, right? So it's the same thing with buying a car. You don't gain any equity from a car. I know that. I love buying cars. I love nice vehicles. I drive around a nice vehicle. It's my worst investment I have, hands fucking down. But I love riding in it and I know what I'm buying. So I know I'm buying a car that's depreciating, but I'm utilizing it to an extent. But anyways, rent, you guys, that's an important thing. And rent's starting to trickle down, which means people are starting to feel people are starting to see that. And that's what my whole page was initially for, especially locally, was to start educating people. Like, the market, real estate's not impossible. We've been told for the last few years, because we've seen an increase, that's impossible. The affordability headlines, all of these things in North Dakota, there is opportunity for people to own homes. Couple that's 21, 20, 20, 21, 22 years old, they're building their first house. They're so excited. On average, there are people around the United States that are first time home buyers at 40 years old. 40 years old is your average first time home buyer. All right, well, we're running out of time. There's one more thing I'm going to touch on. We'll talk on the credit crisis tomorrow. But latest Bitcoin, and this doesn't relate to real estate, but it's something I wanted to point out. Latest Bitcoin retail holders sold in Q1 while businesses kept accumulating per river. Now, this is a big thing that people need to pay attention to, and not just Bitcoin, but anything investment across the board. They're not first time, but investors, retail investors, we buy off of news. We have no idea what we're buying into most of the time. Some of you do, some of you have financial advisors, and those financial advisors are going to do their best foot forward. But most people sell when the market's down. We are in a bear market for crypto, hands down. We're in a bear market in some cases across the board. We saw our moves up but I still think we're going to go into a bear market for the S&P, or I think we're going to go into a bear market for gold and silver at some point. I think there's some movement there, but natural resources are going to stay a little stronger until that war ends. But right now, everybody's scared to put their money in places, and I'm doubling down. I looked at my wife, told her we're buying a twin home. We're building one so that we can make money off the one side, live in the other side, right? So we're going to build one. I told my wife that we're investing, and this money that's investments does not come out. It goes in. I upped the amount that I paid myself this year so I could ump the amount I'm investing. And that is what's super important about what we do, is that we need to start understanding, and that's what I want to be here for you guys to do, is show you that you can make money even when times are stressful. There's ways around it. Number one, and two, you should be focusing on right now more than anything to get into investments, because the markets you're never going to catch the top, you're never going to catch the bottom. But if you keep buying and putting, dude, I started with $5 of investing. I can tell you right now, I have a whole heck of a lot more in there now. But if you're buying into a house, you're learning to invest. If you're getting into the stock market and buying ETFs, funds, bonds, whatever, you're starting to invest. Remember that it's not about quick money. It's about long-term money that's going to grow for sure, right? So if you find something you're confident in, put $5 a week in. $5, that's one coffee a week you don't have to buy. I don't know, a pack of cigarettes is almost $10 now. I saw that. That's crazy. But $5. $5. We spend hundreds of dollars on going out to eat every week. We spend hundreds of dollars on shit we don't need. We buy shoes. We buy the new iPhone. We buy all this stuff that literally does nothing for us, but triggers our brain for dopamine. And we don't invest any of our money. Start investing. Now's the time to start investing. But anyways, if you have any more questions about North Dakota's market, about the real estate market as a whole, we're going to dive into the financial crisis that we potentially could see, the black swan, and where that lies. So, but anyways, thanks for watching. We ran out of time. Have a great day. Like and subscribe for more, and we will talk to you soon.